Former St. Louis Fed President James Bullard. He's dean of the Purdue University Business School. James, I guess we'll talk about the dissent. I don't know if it's really that. I guess it's interesting since it's been since 1993. But what do you make of the GDP report in light of the prior quarter being actual? You know, it's obviously being whipsawed by tariffs and imports. But was there? Can you just say, hey, that's great, it's 3%, or do you have to say but after that statement?
I think you should average through the first quarter and second quarter. As you just said, that comes to 1.2%, so that's kind of sluggish growth. I'm not surprised. You're coming in with a new tariff policy. Those are taxes. That's usually not good for global growth. You had the 2018-2019 trade war. That's exactly what happened. Global economy slowed down. You didn't get any inflation out of it, but the global economy slowed down, and the Fed eventually eased in the summer of 2019. So that playbook is absolutely playing out here, and that's how I interpret the first half of the year on GDP.
I wonder why it's almost a stigma to dissent. Like, I bet you even though you sound like you think maybe a cut isn't an insane idea. And the other number that everybody's talking about is final sales to private domestic purchasers. That's supposedly a key indicator of demand, weakest 1.2%, weakest since 2022. So a low PCE, no real signs of inflation, and possible weakness starting to emerge. Why is it? Would you have dissented yesterday? You probably wouldn't have, because you're a company man. James, why is everybody? Is it good to be a company man when dissent would be such a good thing in a monolith like the Fed or with groupthink?
Yeah, I think there's a lot of groupthink, and you really have to fight against that. I think if you are going to dissent on the day, you have to say they really are making the wrong decision on that day, and that's what Chris Waller and Mickey Bowman said. I think they've got the right side of this argument. The committee went on pause earlier this year because they wanted to see what the effects of the tariffs would be, and they've kind of got an answer now. It's slower global growth, exactly what you'd expect, and not much effect on inflation, very muted. And so they can resume the campaign to recalibrate the level of the policy rate, which is a little bit too high right now for the situation. So that's why I think they are going to go in September ultimately, and then again in December. And I'd go further and say you'll probably get 100 basis points over the next year on the policy rate as inflation continues to come down through in the first half of 2026.
So when you said you think they had it right, you meant you think the dissenters had it right. And as you pointed out, on the day of the decision, if you're a dissenter, you've made your feelings known, and you're pretty sure of yourself. And you said are you in that camp? Would you have gone along with that?
I dissented on this issue sometimes, where the committee likes to do this. They like to, as a way to compromise on the committee, they'll say things like, okay, we won't do this today, but with high probability we'll do it, we'll do it next time. I said, well, if you do it next time, why don't you do it now? And so sometimes I dissented on that kind of logic, and that sounded to me like Chris and Mickey were thinking that way.
Right. And that's why Powell couldn't say, I think he was sensitive to that take. That's why he couldn't say anything about September. It's like, okay, we're going to wait to see inflation, but we're probably going to cut in September because we're pretty sure there's not going to be a resurgence of inflation. Well, then if you know that, you could do it now. So it sounds to me, James, like it's been clear to you that in terms of the dual mandate, that there was more risk on the full employment ticker, but more risk of tariffs causing a growth slowdown than causing resurgent inflation. And has that been clear to you? For how long?
Yeah, well, I mean, like I say, I lived through 2018, 2019, and that was basically what happened. Yeah. And of course, that's what's going to happen. The countries that are being hit by these higher, globally, that's what will happen, because the countries that are being hit by these higher tariffs are going to not be able to sell as much stuff in the U.S. They have to find new markets or produce less. and they're scrambling around, and that's fine. They have to adjust to the new policy, and it's not all bad, but it does mean probably slower growth for a time in the global economy, and that comes back to the U.S. through multinationals here in the U.S.
If I was the administration, I might concede that it was an average of 1.2, and we're doing our best, and we got the none of the effects of the one big beautiful bill on immediate expensing. None of that's in here yet, and that could help. And lower interest rates could also help offset the negative effects of the tariffs. So both of those things could be a positive. So I don't know if I'd be just crowing about how great the economy is when you're putting pressure on the Fed to cut.
Yeah, I mean, the narrative is a good one. It's very much a pro-business sort of administration, and they've got many policies, I think, that are pro-growth that will ultimately bear fruit, as they did in 2017, 2018. And I think you will get faster growth. You've got the AI boom going on, and markets love that. So markets are looking ahead, as they always do, and they're saying, all of this looks pretty positive, even though the world has to adjust to the new tariff policy.
Right. Well, we'll have the Treasury Secretary on and watch. He's so forthcoming a lot of times, but it's a needle to thread, I think, to both talk positively about that. I mean, it was a better than expected GDP number, there's no doubt. But if you want lower rates, you don't want to crow about it too much, I think. What should we ask him? What would you ask him, Dean Bullard? What's your give me your best question? Not what kind of tree he would be if he was a tree.
Yeah, I don't think the administration really needs lower interest rates. I do think that the policy rate is a little bit high for the situation, and I do think that the Fed should reduce the policy rate as it becomes clearer and clearer that the tariffs are not inflationary. And here's the thing about interest rates: if the unemployment rate is close to the natural rate, which surely it is, the low 4% range somewhere, and inflation comes down a little bit more, from underlying inflation being 2.5%, it comes down a little bit more. The policy rate is supposed to be down close to wherever you think the neutral rate is. That's 100 basis points lower, at least, than where the committee is today. So the direction of travel should be to lower rates. But I don't really think that the administration really needs those lower rates, because they've got many other policies that are driving growth, and markets are loving that.
Right.
And I guess you would not lower them by 300 basis points, as the president has.
Well, he just said 2 this year and 100 basis points next year. It's halfway there.
I would say be careful what you wish for. I mean, we had super low rates, and I've been on this program talking about super low rates, and I didn't see any boom coming from that. That was just a very unusual situation historically, and boy, we struggled in a lot of ways during that period. So I don't think that's what you want. You want interest rates that will allocate capital in just the right way and get the growth chain going. Yeah.
So